The dreams of a stock market crash and a recession is now long gone. So you can guys forget about that idea of a stock market crash or a recession because the Feds are, and the economy is suggesting otherwise. I'm going to show you some details here, but I know a lot of you are wondering, well, if nothing is happening, then why is my portfolio not moving, or why am I not making money in the markets? Well, I'm going to explain you all of that. And if you understand what I'm about to say, maybe you'll start looking to the future and you start smiling. So let's get right into it. Look, the Feds are set to double their projections for the economy in 2024. GDP has actually grown significantly. Okay, so when the GDP has grown, well, investors right now, because we're in a state of fear of further rate hikes and companies might struggle, well, the economy is suggesting otherwise. Even with the rate hikes, companies are performing. And we see some companies are actually, outperforming other peers in the industry. So why are they not moving like they should? Well, because we're not actually in a bull market. We're in a market that's coming out of a bear market. So the economic growth forecast is something we're going to see this month for 2024. When we project the GDP to increase or the economy to do well, investors are going to pile on because that's how we invest. We invest for the future. We don't just invest because a company's doing well now. We want to see that it's doing well or it's going to do well in the future. So that's one thing you're going to keep an eye on, guys. Just because the Feds are there with their finger on the button in regards to interest hikes, it doesn't mean you ignore the facts. The fact is the economy is growing. But if the economy is growing and the Feds are still there waiting to bring inflation down to 2% from 3%, that's slightly scaring investors and swing traders. So you got to look at the fact. The GDP is going to topple the fear of inflation and the fear of interest hikes because we're coming to the end of those hikes and to the end of inflation because we're seeing at 3% now and the actual number we wanted to is 2%. So, you got to look at it and start position trading because that's what the market is all about. It's about position trading. Now, the Fed, Williams, he spoke recently and he said that the actual monetary policy is in a good place. And true, guys, it is in a good place. The Feds have done an amazing job. You like them or not. They have done a great job at actually sorting out the inflation sort of things. Now look at this guy, Bank of BOS. B stands for BS. We'll need a recession to get inflation back down. Bank of Singapore. Who are you? You don't live in the US, right? So yeah, you want to just avoid these guys for a bit and just focus on the facts, guys. Focus on what investors are doing. Okay, so the Feds are growing, or the economy is growing modestly in recent week, and the Federal Reserve officials back rate rise pause in September. That means if they don't hike rates, well, that's good news. It doesn't have to be, let's hike rates and scare everybody. Now, if they don't hike them, that's even better because it means we're just going to keep putting that pressure on the inflation sort of things and keeping the economy doing its thing like it does. And that will cancel that out. And if we can get the supply to meet the demand, well, inflation gets sorted on its own, and the economy grows automatically slowly. When the time comes for a bull market, the Feds will start to cut down rates because there's no way you're going to have a bull market without rate cuts. That's just, throughout history, we know that's something that we've seen. So where can the market go? Let's look at the chart. Well, the market can come down to this level, 13,000. That's 700 points, down. But of course, doesn't have to go this way. It can stop halfway through here to 13,500 and bounce back to meet this area of 13 or 14,200. Okay? And then again, goes sideways. Position traders are the winners here in this regards. Those are the people who are going to start seeing success because this is a very unpredictable market for swing traders. A position trader simply puts their money and says, well, in the next 6 months, I'm going to see such and such to play out. And that plays out for them. Okay, but the idea of inflation is long gone, guys. You don't want to bet on that idea anymore. You want to actually look into betting on the markets does like I've done recently, put in 6 figures in the market, and I might double that very soon. So I believe, and here is my opinion, guys, the next 6 months. Let me change it to cinematic so we can get more focus. The next 6 months, we're going to see a slow and steady market, but accelerated upwards, just like we've seen the last 6 months. A pullback will happen when they hike interest one more time. And that will be very quickly engulfed. As we enter 2024, we might start to see the first rate cut. And going into 2025, we get the bull market that we're expecting. Okay? And that's one thing you have to keep in mind here when investing, guys. You might not get a bull market in 2024. You might get a market that is recovering and making highs constantly, but pulling back slowly. And in 2025, well, you get the market that we all dream of, which is a bull market. Okay, guys, that's me done. Hopefully you enjoyed this. I'll see you guys very soon. Appreciate you for watching. Peace and love. If you want more updates like this, you know what to do. Bye.